Hey, welcome back. Today we're looking at where the money is moving in Korea and the hurdles the government is trying to clear. First, let's talk about the cash parking trend we're seeing. According to data from the Korea Financial Investment Association, the balance in money market funds, or MMFs, has hit a record high, surpassing 200 trillion Korean won recently. At the same time, we're seeing a surge in covered call ETFs. This tells us that folks are becoming increasingly cautious. Instead of betting on aggressive growth, investors are seeking out low-risk vehicles or products that provide steady monthly dividends while they wait for clearer signals from the market. This cautious sentiment is tied into the broader corporate value-up program. One of the biggest talking points in Seoul right now is inheritance tax. Korea has one of the highest inheritance tax rates in the world, with a top rate reaching up to 60% when including premiums for largest shareholders. Industry groups are arguing that these rates are a major barrier to corporate succession and are actually discouraging companies from increasing their valuation. The government is currently weighing tax reforms to address this, hoping that lower tax burdens will lead to better shareholder returns. While the financial markets are liquid, the regional real estate market is facing a different story. Outside of the Seoul metropolitan area, the number of unsold apartments, often referred to as mibunyang, is rising. This is putting significant liquidity pressure on mid-sized construction companies. While Seoul remains competitive, the regional slump is a growing concern for the Ministry of Land, Infrastructure, and Transport, as it could impact the broader stability of the secondary financial sector. To wrap up, let's look at trade. Despite the logistical headaches caused by the Red Sea crisis, Korea's exports grew by 13.8% in April. However, shipping costs are a rising concern. The Shanghai Containerized Freight Index, or SCFI, has been climbing, and companies like have had to reroute vessels around the Cape of Good Hope. This adds about 7 to 10 days to the journey to Europe, increasing costs for exporters. It's a resilient performance for Korean trade, but the overhead is definitely something to watch. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in. Thanks.